G'day. Welcome back to another episode of BOBB, Bear on Bull Market Boulevard. Today we're going to be talking superannuation investment options. Pay no attention to the picture on your screen, it's just something that I wanted to bring up. Otherwise, if I had another image on the screen, it was going to be a different superannuation website. So essentially today what I want to talk to you about is does your super fund or do other super funds in Australia have different investment options to suit you? Now, very, very hard question to answer. Everyone has a different style. Some people may be completely against investing and say, no, keep all my funds in cash, keep everything in cash. I just want to earn the minimal interest rate, which actually isn't too bad now with interest rates going up. And then there's other people in their younger years, which are like, well, go as aggressive as you can. How aggressive can we go? And we're going to answer those questions today. And what I've decided to do is, much like other videos, we're going to go through websites that has information out there that anyone can access. And what I've chosen to do is use websites from Australian superannuation funds that are the top funds in Australia at the moment. So the top funds, not in order, but the ones we're using today are Australian Super, Host Plus, Australian Retirement Trust, referred to as ART for the remainder of this. And also we're going to use UniSuper. We're going to go through their websites and have a look at their investment options and just get a better understanding of what they have to offer, what you can invest in, and do they have options that are suited to you? And if they don't, well, it's a bit of a hard one to answer, but if there's nothing that matches what you're after, which is unlikely, I mean, they usually always have something to cater for most people. But if you are in that higher wealth bracket that can afford, you'd potentially look at seeing a financial advisor who can make a tailored portfolio just for you. And when I say that, there are financial advisors out there that work on tailored portfolios that are just cash based. So yes, you can do it yourself, of course. But if you are in that, high net worth individual, and you need someone to manage that for you, unfortunately, none of these superannuation funds have that sort of an option that may cater to you. So we'll go through that in a bit more detail. But let's start with, everyone knows Australian Super. Let's start with Australian Super. So you go onto the Australian Super website. If you are an Australian Super member, you will be invested in one of several different options. So if you want to see what you are invested in, obviously log into your own account and find out what you are invested in, and then find out if that is what you're actually after. If you're, let's hypothetically say, I'm just going to go for the easy ones here. So actually, I'll take a step back. So you've got a couple of different options. You've got the pre-mixed options, pre-mixed by Australian Super. You've got the DIY mix. You can have a little bit more hands-on. And then you've got Member Direct. Member Direct is really hands-on. So you actually get to choose shares within the top 300, I believe. Let me just... Yes, the ASX 300. There's also a couple ETFs on there and LICs, so listed investment companies. We'll go through listed investment companies in another video. There's not a huge amount of them, so to speak of, compared to the likes of ETFs and managed funds, but we will go through it in a little bit more detail, as not a lot of people understand completely what are they, what do they differ from an ETF or a managed fund. Anyway, I digress. So you have three different options. You've got the straightforward pre-mixed, whatever you're going to be in, which is like the balanced option, I'm pretty sure, is when you jump into Australian Super. You've got DIY mix, and then you've got Member Direct, which is you get to sort of choose your own options. So let's start with the pre-mixed options. So coming onto that side of the website, we have high growth. So you're a younger fella, it's more than younger fella or lady, you are more than likely to be in a high growth option. If you're not, I'm not making any, not going to provide any financial advice in this video, but younger people are generally in a high growth option. They're not going to be in a, conservatively balanced or a balanced option or in cash. Because you have, if you're young, you're 20 years old, let's say, and right now a lot of people are retiring between the ages of 65 and 67. Whilst you can access your super at 60, not a lot of people are. But ideally, you would want to be able to access your super at 60. So If you are in your 20s, started your first job or just come out of uni, whatever it might be, it's likely you'd be in a higher growth option. And the reason behind that is you have 40 years before you retire, so you can take a bit of risk. You do have the balanced option with Australian Super. Now, there's been a little bit of controversy around this. Australian Super has a lot of unlisted assets within their portfolio of investments. A little bit of a hard one to go into in very basic detail, but essentially a lot of those assets, it is considered to be a little bit higher risk than what Australian Super are saying it is. So I was just about to go into it, but I won't. Look, the balanced option is the standard option. If you join Australian Super, put your money in, it'll automatically go into the balanced option, most likely, depending on your age. There are other options: socially aware, index diversified, conservative, balance, and stable. Socially aware is coming up on a lot of these different superannuation funds. So socially aware is generally a fund which has a skew towards ESG. So what does ESG mean? And I'm going to, instead of explaining it to you, I want to show you in a little bit more detail. We've gone through Investopedia and MoneySmart in the last two videos. So this is a great example. If you type in ESG into Investopedia or you type in ESG into MoneySmart, you're going to get a great explanation. What does ESG mean? What is it? So MoneySmart is great. Honestly, they've got so much information there. A lot of people bag it out, say it's just a government website, it's crap. It's not. It's got a lot of information, especially for those beginning in finance and economics. So environmental social governance, ESG. So essentially what that means is a lot of these, and I'm not just saying superannuation funds, just in general, a lot of companies, they have to begin to invest more ethically. Now, that's a hard one again, which is why we won't go into too much detail, but investing ethically is very, very hard. So you might think, well, I've got an ethical investment and it's got banks in it, but the banks invest in XYZ, which is completely unethical. Good point. And again, look, there's no way around it. It's a bit of a hard one. But depending on what your preference is from an ethical perspective, you might not like tobacco, you might not like, let's say, alcohol, maybe weapons, these sort of things. You can find investments that cater to that. Maybe not within the superannuation fund, but if you're investing individually or in different ETFs, managed funds, whatever it might be, you might be able to find that. Actually, you will be able to find that, but within a superannuation fund, it's a little bit harder. Anyway, with Investopedia and MoneySmart, they both have really great explanations as to what is an ESG, stock, ETF, or managed fund, in this case, investment option for your superannuation. So let's jump back. We were on Australian Super. So you do have all these different options, gives you a little bit of a performance snapshot, how well they've done in the last couple of years. Look, it's a bit of a hard basis. Last couple of years has been quite interesting. You've seen, and this is a very important note to make, you might go to some of the conservative funds, whether it's on your superannuation fund or wherever you go, and you look at the last 3 years, 2 years, whatever it might be, and you're like, wow, why have the conservative funds done so poorly? We have had a very, very interesting couple of years. And one of the crucial points to how some of the conservative funds have actually done quite poorly is a lot of the conservative funds are made up of assets called bonds. And we'll go into bonds in more detail in another video. But I'm sure you have a very basic understanding of them. But essentially, bonds interact inversely with interest rates. So if interest rates go up, the value of a bond essentially goes down. And that's put in the most basic perspective. So we've gone through a period in the last few years where interest rates have continually gone up for, wow, quite a while now. Yeah, especially if you're here in Australia, looking forward to the first Tuesday of every month. Anyway, I digress. Which has negatively impacted all bonds. And so what that means is people in conservative portfolios have actually, unfortunately, had quite a rough few years, whereas in previous times they wouldn't have earned as much as someone in a balanced or high growth portfolio. However, they could feel comfortable knowing whatever they're investing in was safe. We did not expect anything to happen like what has happened since 2020, March 2020. So very, very interesting times. Anyway, we're not going to go into why we're investing, what we're investing in, and any recommendations, just giving you a little bit of a brief background as to why some of the investment returns might look atrocious on the conservative side of things. So Australian Super, one of the largest funds in Australia, if not the largest. I'm also going to use Host Plus as an example. We'll go to their website. Host Plus is quite infamous in Australia. Good old Scotty. I really like his books, by the way. I am an ex-wealth advisor, wealth manager. Look, his books are great for people beginning their financial journey. He copped a lot of crap from people in the finance industry, and I think it was absolute junk. Honestly, actually, I really don't want to go into too much detail. Good bloke, good book. Anyone that doesn't work in financial planning or in wealth management, these sort of things, that wants to understand how to start their wealth journey, to create wealth creation, wealth preservation, it's a great place to start. It's a good book. It's $20 or whatever it is. I think I bought one of the copies for an accountant for Secret Santa a while back, and I think it cost me like $14 or something from the post office. So give it a read. It's a very light read. First bit of the book is just about him, and the rest of it is really, really good content. Anyway, in his previous, I'm not sure about the most recent, he recommended Host Plus. And that's why I've decided to use that, because it is one of the largest super funds in Australia, and Host Plus is a good fund also. So when you go to their website, if you are a Host Plus member, you want to understand what you're invested in. So I believe, looking here before, we could go to compare our investment options. And this one had a little bit more information, especially from a cost perspective, than Australian Super. So it says up here, leave it to Host Plus, which just means you transfer your super over, it'll go into an automatic investment option, which is very, very common. So when you transfer your super over to a retail or industry fund, it usually just goes into their default option, which is anywhere from balance to, in this case, it's called My Super, but it's generally it's never going to be an extremely risky option. It's not on the conservative side. It's kind of in the middle, a little bit higher than the middle usually. But you do have investment options. So you've got pre-mixed options, which is showing the net return over the last 7 years. We have high growth shares plus. I'm just trying to see how to scale this over. Oh, here we go. So we've got high growth, which has had it's actually not showing the returns here, is it? Return target of CPI plus 5% over 20 years. It's actually not showing the net return, so I do apologize for that, whereas the following share is showing a net return of 8.66%. Probably more importantly here is I like the transparency where they show it straight up, which is your investment fees and costs. So again, we went through this in the last couple of videos. We've also just quickly touched on it when we went to Investopedia. The investment fees is a percentage basis of what you've invested. So hypothetically, you've invested $100,000 and you've got a 0.79% investment fee. That means $790 per annum is going towards the cost of the fund. So that's why we look out for, if you've got two different funds that do the exact same thing. So let's use this is a bad example, but it's very straightforward. You got a fund that tracks the ASX 200, and you got another fund that tracks the ASX 200. We'll call the first fund Fund A, and the second fund Fund Z. Fund A is doing the exact same thing as Fund Z because there's no difference. ASX 200, they're just tracking it. Fund A charges 0.5%, and again, that's pretty high for just tracking a fund. But we're going to say Fund Z tracks the exact same fund but charges 1.5%. By the way, that would never happen. If it did happen, it's very unlikely anyone would invest in their fund. But it's a huge difference. Think about that. You've got $100,000 invested. The first fund is only charging you $500 for a year, but the other fund is charging you $1,500 for a year. So there's a big difference. Anywho, another tangent that I always go on. Big hater on fees, as you can tell. So you've got a lot of different investment options here based on what you would prefer to invest in. Look, generally investments are based on age. So the closer you get to retirement, the more conservative you want to be. If something happened like the GFC or COVID, a couple of years before your retirement and you are losing a large amount of your funds, not ideal. So you'd want to go more conservative. Again, something that hasn't happened in many, many years, only a couple of times in history, where bonds and cash alternatives have underperformed, more aggressive options. And that was sort of the start of, let's go with between 2020, 2021, up until 2022 till now. So there has been, unfortunately, a little bit of a downturn in the conservative market, and you'll see that just going through sort of conservative funds, and you can see there, hopefully you'll be able to see their returns somewhere on the website. Now, I like that. Props to Host Plus for showing investment options and cost. I hope I haven't just called Australian Super out and said they didn't show it, because I love Australian Super as well, but no, they haven't shown it. They really should. It'd be a great little add to their website so people understand how much they're paying for their products. I'll just make it very clear, Australian Super products are quite cheap. So I'm not saying in any way they're not showing it because it's expensive. There just doesn't seem to be very apparent anywhere here. So we've gone through Australian Super, we've gone through Host Plus. They have their investment options, defensive, index high growth, index balanced. I'll be happy to make another video after this to explain what each of these are, because they're generally pretty identical on most websites. If you go defensive, the other website might say conservative. This one says index high growth. Obviously, that's quite straightforward, actually. I'd be happy to go through a video and explain that in a little bit more detail, but I'm sure most of you watching these videos, if you're at the point of watching these videos, you understand what these things mean. And if you don't, there should be a fact sheet, investment details at the bottom here, to give you a little bit of a better explanation. So again, we've seen socially responsible, 3 different options. There we go. So these are all your pre-mixed options. Now, each super provider has a different way of mixing through their superannuation investments. As I showed you before with Australian Super, they have a sort of DIY option, Member Direct. Almost forgot the name of it. Host Plus has similar options. Choice Plus, I believe. I'm going to assume that's what it is. Yes, it is. Then you got single sector options. So you can actually choose, let's say hypothetically you have $100,000 and you're like, okay, I want 25% in Australian shares, I want 25% in international shares, and I'm a little bit worried what's happening in the market. I want 50% in cash term deposits or alternatives, whatever this is. You can do that through these sort of sectors. So both Australian Super and Host Plus offer those options. I actually downloaded Host Plus and Australian Super just for a bit of fun, just for a bit of research on my phone, just to see how well it works. Look, Jesus, it is really, really easy to use. They've both spent, it appears they've spent a fair bit of money on their applications, so they're quite straightforward and easy to use. I have used other applications with other platforms who manage a lot more money, but have not paid for the user interface that is easy for people to understand what they're invested in, these sort of things, which is very, it's not good for the people that are investing in these platforms. So props to Australian Super, props to Host Plus so far. Let's continue on and go to the next funds. Look, now we've got left UniSuper and Australian Retirement Trust. So Australian Retirement Trust, it's eluding me right now. They purchased, whatever we want to call it, another fund. So they have quickly, they are actually one of the, they have some of the most members in Australia. I think they're in the top 5. And UniSuper is just another one that is very common, especially with clients that I've dealt with in the past. So UniSuper, similar to the last couple of websites. Again, I feel like I'm just repeating myself here, but that's the whole point of this video, I guess, depending on which super fund you're with. If you want to understand what different investment options there are, you can go to investments and then go to our investment options. So our investment options down here we go. Little bit more clunky interface, but it's very, very straightforward. You've got conservative, balanced. Now conservative is obviously the most conservative. Conservative balance is saying that it's between conservative and balanced. And then you've got balanced, sustainable balanced. As we've mentioned, I've got 4 or 5 times now in this video. Sustainable is generally tied to ESG, which we showed you. You can go onto Investopedia or MoneySmart and get a better understanding of what ESG means. We've got growth and high growth. So generally growth is going to be 80-20. What that means is around 80-20, which means 80% of growth assets and 20% of defensive assets. So growth assets are generally international and domestic shares, and the 20% remainder will be the likes of cash, term deposits, and bonds or other conservative assets. High growth is generally more in the 90, sometimes a lot higher, 90 scale, which means 90 to 95% growth assets and 5 to 10% defensive assets. And then we have a sustainable high growth option here. So looks like you can view more details. I'm not going to go into each of these. I'll let you do that on your own time. So that is UniSuper. Again, seems to be quite a straightforward website. Now, Australian Retirement Trust. Australian Retirement Trust, as I mentioned, they do also have, oh, that's great. Up the top, investments, investment options, and shows you different options that they do have available. So they've got a balanced growth and conservative option, a little bit less than some of the other websites we've had a look at, but is giving you a great little bit of information as to how much they invest in each one. So let's choose a different one just so we can test the website out. Let's use conservative, see what happens. So we have designed for members who seek less volatile returns. Yeah, of course, when you're going for conservative, and are likely to use their money in the short term. Excellent. So that's a really good point to go back to. When you're coming closer to retirement, it's more than likely that you will go to the more conservative options. So if you're a high growth investor in your 50s, you're not going to go from high growth straight to conservative. Well, you might, but I'm just saying it's unlikely. You just go from high growth straight to the most conservative option. But you start to dial down as you get towards retirement. And let's assume retirement is 60 years old. This is a great sentence. You are likely to use the money in the short term. So when you turn 60, you're going to start to use some of that money. Time frames, 3 years. So conservative is generally 3 years. Balances are between 5 and 7 years, and growth is 7 years plus. So if you're investing in these different options, you don't want to be changing between these time frames. And then down here, it is showing you, we've gone for the conservative option, remember? So we've got a lower allocation towards Australian international shares, certainly private equity, and property. So what we're going to see is a higher allocation towards fixed income being those sort of more conservative investment options. Not saying it's just cash, but it'll be more sort of bonds and other cash alternatives. So we've got a 40% allocation there. As you can see, that is a lot higher, and a huge allocation towards cash. And I assume cash and cash alternatives. So another great example, thank you very much, Australian Retirement Trust. So look guys, we've gone through, just to make it quite easy, we've gone through Australian Super, Host Plus, UniSuper and Australian Retirement Trust, just looking at their different investment options, what they offer, and kind of a very basic understanding as to what they do. So I hope this assisted in any way possible. If it didn't, look, leave a comment or just email us directly, send us a message, let us know what is important to you. We are going to make a couple more videos after this just so you have a better understanding as to what your superannuation is actually invested in and how it works. But look guys, thank you very much for your time again. Have an absolutely amazing day. Thanks.